So, unsecured lending for MSMEs has always been a big, important part of growing and expanding the business. So, a kind of a BNPL product was already existing earlier. The only difference was that they used to take it from an informal source of channel, like a money lender or a friend and family or something like that. The key difference between a BNPL and traditional finance product is BNPL is for a shorter duration or a shorter time frame, typically between 1 to 3 months. Also, the interest rates vary. In a typical lending product, the interest rates could be very, very high. But in a BNPL kind of product, the interest rates could be negligible, nil. There is a processing fees that is levied, and typically, if you delay beyond the period that is agreed, you need to pay a late payment charges or interest charges. So that's typically the kind of way in which this product operates. There have been some innovations on top of this, and people are innovating to bring in, a small percentage. It could be 4%, 5%, 6%, which is much lower than the average cost of capital that typically you see in the market. So I think it is a combination of things. Like if you look at standalone BNPL, it may not make much sense for the lender. It has to be a combination of financial products that you offer to the same customer. So I'll give an example. So earlier we used to give a payment product or a payment POS terminal at a merchant location or a kirana store, and they used to kind of transact, but that product is not making that much money. Now what fintechs are typically doing is they are innovating on top of that. They're using the payments data that is available, and they are actually offering you a short-term loan or a working capital finance on the back of the transactions that you do, and they deduct the loan amount. It's called the equated daily installment or EDI from the daily collections or settlement that you typically do as a merchant. And those are the kind of products that are working well. So payments combined with lending, combined with BNPL will actually give a very strong proposition to the merchant and will enable the financial institution or the lender to get multiple sources of revenue from the same customer. So it cannot be viewed in isolation and has to be viewed across the financial services category. So as I mentioned earlier, BNPL is a shorter kind of term of a credit or a loan. So if you require a credit for a long period of time, then typically, you may not, BNPL may not be the right product or the offering for the MSME or for the SME customer. So it typically makes sense for a short-term duration, and from a time perspective, it could be any stage of your growth or your life cycle. It depends on how you want to opt for it and kind of repay it back. I think, we'll have to check the numbers and all, but it could be as high as a few lakh crores. We'll have to check the actual numbers because MSMEs in India are so many, and most of them are accessing informal sources of credit, as I spoke about earlier, because they don't have a credit score, because they don't have CIBIL, they don't have all the right data. It's difficult for them to get formal sources of credit. So if I have to put my number to it, then it could be couple of lakh crores easily, which is the BNPL opportunity for MSME segment in India.